Hello guys, welcome back to my YouTube channel. So today, the 30th of January 2024, we shall be continuing from where we stopped, and today we shall be looking at how to trade the London session. How to trade the London session is what we are going to be looking at. So I will start by this template. Remember, we said anything to do with the ICT concept has to do with the open, the high or low, and the close. And today I'll be giving an example for the Euro USD for today's London trading. So I want you to think about this template. This is our Asian session, and normally the Asian session is typically a consolidation where the market engineers liquidity above and below the marketplace. So some people who don't know what's going on in the Asian session, or those people trying to trade the Asian session, will be caught up in this kind of consolidation right here, as we see this consolidation. So after the consolidation in the Asian session, from 20 hours to 00 hours, the market opens at 00, as we said, the 00 open. But remember, your time has to be set at UTC minus 5 strictly. So we open after the consolidation. Think about the AMD accumulation. The accumulation is our consolidation accumulation. Then market opens at 00 hours. We manipulate to take out either sell side liquidity below old lows, or buy side liquidity above old highs. But for this instance, I'm going to give an example for the buy profile in the London session. So we accumulate, take out these lows, the liquidity engineered, because some people can view this as a strong support. These are triple bottoms. So some people may think that if the market taps here, it will buy minus taking out these lows, because they think this is strong support. But we see that the market puts them out and then corrects to take out the buy side liquidity. Those people expecting to see this as a stronger resistance are taken out by the market to attack that liquidity engineered in the Asian session. So the market engineers liquidity to trap both buyers and sellers. Buyers putting their stop losses below here, and then sellers putting their stop losses above here. And that's what we refer to as the purge revert. The market engineers this liquidity to trap the buyers and the sellers. And also we can see here, as the market was going down, some people, the breakout traders, will put their limit orders around these areas here, thinking that if the market breaks this support here, it will become into resistance and then continue lower. But we see they get triggered by their sell stops, and then the market quickly changes direction to also attack the stop losses of those people trying to short their market because they are seeing double tops around here. So the market moves below here to trap, to get sell side liquidity in form of short sellers getting trapped, those who are selling and continuing to sell this market, they get trapped when the market changes direction, and also the breakout artists, the breakout traders who get trapped when they enter the market using sell stops, thinking that the market will test here around here to be in form of resistance, in form of support becoming resistance. So they enter the market to sell. So they sell around here when the market is retesting, but then the market continues to buy. They also get trapped, and also the market traps the support and resistance traders who put their stop losses around here, thinking that this is stronger support. So they also get trapped, and then the market quickly turns to attack the buy side liquidity. So let's continue. So this is our consolidation. We open, manipulate. So this move here, what I'm talking about, this move typically happens in the London session, and that's what I'm going to be teaching you about today, how to get these precise scalps, because this move can yield like 20 pips. So if the market opens, make sure that if you want to trade this kind of setup, when the market opens at 00 hours New York local time, make sure that you box this consolidation out, you box the Asian session as we shall be seeing. So wait for when you box this consolidation, you wait for the manipulation move, either higher or lower. For this case, I'll be illustrating with the manipulation lower to take the market higher. So you wait when the market opens, wait for the market to take either buy side liquidity or sell side liquidity. When the market takes one side of this consolidation, if it takes sell side liquidity, now you move onto lower time frames like the M5, M1s to attack the buy side liquidity and look for signals to attack this buy side liquidity. And also the vice versa, if the market attacks the buy side liquidity, you move on to the lower time frames and look forward for it to take out the sell side liquidity. So a person will ask, on which time frames can we view this kind of template? This can be viewed on our M15 time frame, as you can see here. So you box out this Asian session on the M15 time frame, then move on to the lower time frames like the M5, M1s, M3s, and look for a signal to take the other side of the market. So this type of template is known as the purge revert, and typically happens in generally consolidating months. For example, this very month we're in, the month of January, is known as the consolidation because the year has just started, so markets tend to consolidate on a higher time frame picture, the dailies, the weekly. So we'll be looking at we'll be looking for this kind of scenario here. It can also happen during trending months. For example, the month of November, the month of March, it can happen, but you have to notice that if we are in trending months, you have to align your analysis with a higher time frame order flow. So if the market is a monthly, like the weekly, we are bullish, you will be looking for buys. So if we are bullish on the higher time frame, you will be looking for this template, but you'll be looking for the market to first take out sell side liquidity and then look for buys in order to align with the higher time frame order flow. And then if you are bearish, you'll be looking for the market to first take out the buy side liquidity and then aim for a move lower, since you want to align with the higher time frame order flow. And then in the consolidating month, you may not even worry about the bias if the order flow is bullish on the higher time frame or bearish. You may be looking for any of either the buy side liquidity or sell side liquidity to be taken out, and then look for signals in the opposite direction. So let's continue with this Euro USD M15 candlestick, and we shall be looking at we shall be referring to our template we just seen. So this is our Asian session. So I told you that if the market opens here at 00, please make sure that your time is set to New York local time or UTC -5. So we said if the market opens, we mark out our Asian session from 20 to 00 hours. So this is our 20 and this is our 00 hours. 00 hours when the market opens. So you mark out this box. So after marking out this box, you wait for the market to take out one side of the curve, to take out either the sell side liquidity or the buy side liquidity. So in this case, in today's trading, the 30th of January, we see the market takes out the sell side liquidity first. So we take out this Asian low right here. You see that we also balance out this portion. Remember, this portion is unbalanced, so the market comes to balance it out right here. It balances all of it and also digs into this portion here. You see this this candlestick open, move lower, higher, then close. The next candle opened, small move lower, higher, and then close. The next candles just went up. So this portion here was offered buy side, so we need to offer sell side of the curve. So one can ask me, so how far can we go below this Asian session or Asian lows? So below the Asian lows, you look for things like this, because we said that either the market looks for all lows like this low or all the highs like these highs, or to efficiently deliver price. For instance, right here. So I want you to think about this opening price. So this is our price. Price opens right here and then it starts moving lower. What does it imply for smart money traders? When price is below the opening price, it means that price is so cheap, and smart money traders aim to buy at a cheap price and sell at an expensive price. So whenever you are trying to enter the market, make sure that you are buying in a discount. What's a discount? A discount, for instance, right here, any price below the 00 opening price is considered a discount in this very day, simply because when we open at 00, any price below the 00 becomes a very cheap price. So when the market starts going lower, smart money traders look out for signatures like this to efficiently balance this, and then look to buy at a cheap price. Since we are below the 00 hours the market open, we are below, and then aim to sell at a much higher price. So we see the market goes down into this inefficiency here. So if you are scared to put your limit order, your buy limit order around here, if you're not sure about this inefficiency here, you can wait for a market structure shift, and that's what we shall be looking at. So when the market taps into here, this our inefficiency, and then below the Asian lows, you wait for the market to shift bullish, which is seen around here. I know some of you studied a market structure shift and may not qualify this as a shift in market structure because it has shifted with the week, but for us the ICT traders, we consider this as a shift, more so if you are in line with the order flow, when you know what's taking place. In fact, if you know what's taking place, you do not need to see even a market structure shift, but to gain confidence in your analysis, you wait for a shift in market structure. Immediately we shift, you look for what I've been teaching you. You look for an inefficiency which has been left unfilled, or which you look for an imbalance for the price to efficiently balance it out before it resumes going higher. So the market dips into this inefficiency right here, but notice that we do not, from this point here, open, low, high, close, open, low, high, close, open, low, high, close. With all this portion is balanced out until we come to this candlestick here, which opens low, high, close. We left this portion here denoted by this rectangular box here unbalanced. So, and after we shifted, so when you see something like this, the market has shifted, you either run to lower time frames or set a limit order right here. Set a limit order right here and your stop loss below this swing low. So after the shift, you enter around here and aim to take profits at this Asian high, we said, or for this case in today's trading, we had a liquidity void around here, which I'll explain more in the coming sessions, but today I'll be touching a smaller portion of it, the liquidity void, because someone may ask me, how far can we go above this Asian high? You can either look for inefficiencies above here or liquidity voids, as we are going to see. So if you've not gotten the chance, or if you are scared to enter, right here we see the market dips down, consolidates, another move higher, leaving another inefficiency. So you can set your stop, your buy limit order here, and your stop loss below here, and aim to take profits above this Asian session high, as we say, the purge revert template. That Asian session accumulation, this is our accumulation, this consolidation here till 00. We open, the market opens, moves lower to balance this imbalance out, to offer sell side to this buy side delivery, and also going below the 00 price, the 00 hour opening price here at midnight, which signifies that this portion below here is so cheap. So in these areas here below the 00 hours, smart money is always accumulating longs. It's accumulating every time it dips below the 00. They buy. In these candles below here, they start buying because the algorithm starts to book higher prices because it's below the 00 price, means it's cheap, and it has also offered sell side delivery to this buy side delivery. This bullish candlestick we offer it here. You see the candle of the body of the candles are remaining inside this inefficiency here. These wicks are allowed to go past the inefficiencies because they do the damage, but the body always tell us the story. You can also notice around here the bodies are staying inside our imbalance here, the buy side. So the book of the volume stays inside the bodies, so the bodies remain inside as the wicks do the damage to take out those people with a very small stop losses. So I'll advise you, if you enter around here, you put your stop loss below this swing lows. But remember, we said ICT is all about price and time. So this is the price, the accumulation, manipulation, distribution. So what's the time? The time, we are saying that you wait for an accumulation in the Asian session, that's time. So you combine the aspects together. So you wait for price to accumulate, what time? In the Asian session. So you wait for it to accumulate, what time? What time? Below the 00 opening hour. This 00 opening hour denoted by this dotted line. So at what time do we expect to start? Do we expect to start entering for our longs? Time is the London kill zone from 2 a.m. to 6 a.m. in the morning, New York local time, UTC -5. Please and please, not at 2 a.m. to 6 a.m. in your local time, but in New York local time. Make sure that your trading view is always set to this New York local time, no matter where you live. So people, I know some people on YouTube have some of you, this is your first video. You may have started from this video and it's all over your head. Please go back to the past two videos I produced on this YouTube channel in order to start from where we start from, so that you are not confused about what I'm teaching you right now. So we said you enter with a limit order. Which kind of limit order? The buy limit, or you can, if you are around this time, you can also enter at market execution right here, stop loss here, and then aim to take out the Asian highs, and then consequently the liquidity void. So this move around here only up to here is like 20 pips, and your risk can be like 5 pips. Not so bad in terms of risk. So let's continue. I want to touch a little bit about the liquidity void, because we see our accumulation in the Asian session, the manipulation to fill out this imbalance, and then we shift in market structure, return to this imbalance here to provide sell side delivery, and then we start, the algorithm starts booking higher. We take out this Asian session high, and then for the people who want to hold a little bit more may ask, how far can we hold? You either look for these things, the imbalances, but like this imbalance right here, so you can hold up to this imbalance. See, we offered sell side of the curve, so we have to come back and offer buy side, but also we have this liquidity void. What is a liquidity void? A liquidity void is an area void of any delivery. So in this area here, notice market opened high, low, close, and then gapped down. So this gap here is what we refer to as the liquidity void. It's void of either buy side liquidity or sell side liquidity. So for this area here to be efficiently delivered, we have to offer buy side and then we offer sell side. Then it will be efficiently balanced. But for now, it's unbalanced and it is a liquidity void. Some people call these imbalances liquidity void, but imbalances are not and will never be liquidity voids, because an imbalance either has a buy side or sell side and it's inefficient of one delivery. But these areas here are inefficient of both sell side delivery and buy side delivery. So the market aims to efficiently balance this portion by providing both buy side and then sell side. So if the market books higher, it won't be delivered. So it has to come and buy through it and then comes back down below it. Then it will be balanced. You notice here we try to balance it, but we failed. We left this portion here unbalanced, and these areas right here are where consolidations happen. Because why do we find consolidations in these areas? Because the market is offering buy side, sell side. For example, this consolidation here, we offer buy side, sell side, buy side, sell side, buy side, sell side, which turns to be an accumulation or the consolidation, because we're offering sell side, buy side, sell side. So this portion here is left unbalanced. So you shall see the market will come and also do the same thing as we seen here. Offer buy side, sell side, buy side, sell side. So we shall see some consolidation in between here. So that was it for today, guys. Hope you learned something about the AMD: accumulation, manipulation, distribution, trading, the London session, which starts from 2 a.m. to 6 a.m. That's the time, the ICT kill zone in which we look for these signatures here. So we always combine both time and price. We do not just enter the market basing on one aspect. For example, one may base on price only and tries to enter in this imbalance here before the London Open this year and tries to buy, and the market takes him out. So you have to wait for time. So price comes because someone will ask why this imbalance. Because of time. This is when the London kill zone started. If the London kill zone had not yet started, we may be considering this old low here. Maybe if the London kill zone started around here, we may be considering this old low and then this inefficiency right here. So guys, that was it for today.